In our video today, we want to talk about the advantages of giving directly to your charity or church from your IRA account after you have reached the age of 70 and a half. Let's talk a little bit about the pre-age 70 and a half and post-age 70 and a half rules as it relates to deducting charitable giving. So let's first talk about the pre-70 and a half. With the new tax law, you still claim charitable contributions on Schedule A, the itemized deductions, but the thresholds to go above the standard deduction and itemize are a little bit higher now. They're $12,000 as a threshold for single, $24,000 as the threshold for married. Now, we're not referring to the threshold of having to give that much or more than this amount. We're talking about the total amount of itemized deductions need to exceed the standard deduction in order to itemize. So it's $12,000 as a single, $24,000 as married. So even if you are able to exceed the thresholds in order to use itemized deductions and deduct your charitable giving, one thing to keep in mind is that your charitable giving does not reduce your taxable income from the standpoint of how much of your Social Security benefits are taxed. So regardless of how much you give, it doesn't reduce what's called the provisional income. And the provisional income is the calculation that's used in order to determine how much of the Social Security benefits are taxable. So there's a little bit of a limitation with current tax law in terms of deducting charitable giving and also how much Social Security benefits end up being taxable due to or lack of charitable giving. Now, let's look at the threshold of being over the age of 70 and a half and how, if you were to do your charitable giving directly out of your IRA account, directly to the charity or to the church, what are the benefits of doing that as opposed to how they normally had been done? Well, first of all, instead of deducting the charitable giving on Schedule A and the limitations of deducting on Schedule A, a direct charitable contribution is what's called an above-the-line deduction. That means we don't have to worry about whether or not we can itemize. We're able to deduct the amount given directly from the IRA account from our taxable income. But not only does it get deducted from our taxable income, it gets deducted from our provisional income. And provisional income is the calculation that's used to determine how much of the Social Security benefits are taxable or potentially taxable. So if you're over the age of 70 and a half, if you have IRA assets and you would normally be giving charitably to a church or to a ministry or to some charity, then working directly with that charity or church in order to directly give directly from your IRA to the charity has increased benefits to you from a tax planning perspective.